Mastering business interruption insurance. Supply chain disruptions are lurking, and only the right business interruption insurance policy can save your revenue streams. What provisions are available in a business interruption insurance policy that would allow me to purchase coverage for supply chain disruptions or contingent business interruptions that might impact my operations and revenue streams? In a business interruption insurance policy, there are several provisions that can be added to provide coverage for supply chain disruptions or contingent business interruptions that might impact operations and revenue streams. Contingent business interruption (CBI) coverage is an optional extension to a standard business interruption insurance policy that provides protection against interruptions to a business's supply chain or customer base. This coverage can be purchased to protect against disruptions to suppliers, customers, or other entities that are critical to a business's operations. There are several types of CBI coverage that can be added to a policy, including supplier extension. This provision extends coverage to include interruptions to a business's suppliers, allowing the business to recover losses incurred as a result of a supplier's interruption. Customer extension. This provision extends coverage to include interruptions to a business's customers, allowing the business to recover losses incurred as a result of a customer's interruption. Leader or key supplier extension. This provision extends coverage to include interruptions to a business's leaders or key suppliers, allowing the business to recover losses incurred as a result of an interruption to one of these critical entities. Attractive nuisance extension. This provision extends coverage to include interruptions resulting from an attractive nuisance, which is an attractive feature or condition that draws people to a location, such as a popular restaurant or tourist attraction. Utility services extension. This provision extends coverage to include interruptions to utility services, such as water, gas, or electricity, allowing the business to recover losses incurred as a result of an interruption to these services. Finally, a business can also purchase a contingent business interruption aggregate limit, which provides a combined limit for all contingent business interruptions, allowing the business to pool its risk and purchase a single limit that applies to all types of contingent business interruptions. When purchasing CBI coverage, a business should consider the following factors. 1. Identify critical suppliers, customers, or other entities that are crucial to the business's operations and revenue streams. 2. Assess the likelihood and potential impact of a disruption to these entities. 3. Determine the level of coverage needed to mitigate the risk of a disruption. 4. Consider the cost of the coverage and the potential cost of a disruption. 5. Review and negotiate policy terms and conditions to ensure they meet the business's needs. By purchasing CBI coverage, a business can protect itself against disruptions to its supply chain or customer base, ensuring that it can continue to operate and generate revenue even in the event of an interruption.